All right, good morning, good afternoon, good evening, everyone. I'm a couple of minutes early. Let's take a quick peek at the calendar for March the 7th. It's speech day today, right? We just went through the ECB press conference, and we're now looking ahead into the ECB President Lagarde speech. We have a German speech, and we have Federal Jed Powell testimony, the continuation, part two. And so all of this is happening in the next couple of minutes, right? So I traded a bit earlier with a student, and I did have a couple of swing trades that are still open. We profited, he and I together, for the first four boxes. The market seems to be in a bullish trend. And so we don't want to fight the tide. We'll have to wait and see what, Powell and Lagarde do to us. All right, so let's wait this out. Let's see, let's give it a minute or two, and we'll see what we're getting ourselves into. All right, so just looking back at yesterday, let's go to a daily real quick. All right, so yesterday, this is what we ended up playing in or within. If we compare today with yesterday, we do have already a higher high, already a higher low, clearly a bullish biased environment, right? Looking at that on an hourly scale, you can see since the previous Lagarde speech, we've already retraced everything that we had given back earlier. And so now looking forward, we're back to that 50%. And the next target would be somewhere in this neighborhood up here, right? Probably not today. It may happen today, but no. Considering what an average day is, compared to average is 48, compared to what we've already done, that being 53, we're already over the average. Keep that in mind, right? It's not going to go to the moon. Right, so let's go back to our 5 minutes. And then from here, we typically give ourselves a ladder to work within, something like this, like what we've done here yesterday, right? So clearly our floor is here. Clearly our ceiling is here. And then the ladder are all these levels in between. All right, so let's zoom in and let's turn on the squawk box and listen to see what Powell and Lagarde have to say. All right, so this is on. And as soon as the event starts, we should hear it. All right, so bullish is the way to go. We want to be buying on red candles. All right, and then as they speak, the testimony may be, longer than we think. And so if he happens to mention something important, I'm sure there's a fly on the wall that will let the media know. And you and I will react appropriately. Right? So this is yesterday's range, or sorry, today's range. We happen to be bullish from yesterday. And we would be targeting 3 to 4 boxes beyond this. Right? So where does that put us? What's 36 pips beyond where we are? That happens to bring us to approximately 950. Right? So if we can get up to 950, we want to be sellers again, just like we did yesterday for this piece here. All right, so let's go take a look at that before I start trading here for today. This is what we did yesterday as a group. This is what I had left the plan for you guys to execute on, and that's what that plan yielded. And here I am today repeating the same kind of thing, right? Buying on the bullish side of things, making 3 pips on the way up. Basically, we're buying support. and ultimately we'll find resistance and start selling into that resistance. So that's the goal, right? That's the objective. Right, so let's see a red candle. Actually, before we start that, let's draw some lines. One here, one here. Let's pick this one. Right, and then on the upside, let's say we just assume, right? This is just a game of assumption. I'm just, with my mind's eye, spacing them out more or less evenly. Right, so 1, 2, 3, 4, somewhere around 4 or 5 rungs, which is the same to our 3 to 4, maybe 5 boxes. Right? These are just averages. If you're looking for accuracy, you're in the wrong business. Right? It's a game of averages. It's a game of probabilities. Right? So we know what we're up against. We know how we'll do it, how we'll get there. The speech mustn't be contributing any volatility as we speak. I want to see a red candle so I can buy a little bit. I have no open trades other than my swing trades. 1, 2, 3, 4, 5 boxes, 5.5 boxes into profit already. Maybe I'll book them before we experience a pullback, right? And so if there is a pullback of any kind, I can maybe reassign some swing trades and continue to play 3 pips, 3 pips, 3 pips. Right, so we're back to 57.15. It's almost as though this never happened. Right? By the end of today, we'll have recovered Monday's losses or Tuesday's losses. Right, so getting back on track. The current week, right, we're recovering. We've chewed in about half of the losses that we had booked on Tuesday. So things are heading in the right direction. Right. Let's buy a red candle if we can and get ready to catch a breakout with this. Oh, there's my red candle. All right, I put 1, I'm allowed 4 because I'm in, this is now my box number 1. And so I'm allowed 3 more beyond this. All right, I just want to see a red candle. I want to be able to buy a pullback, right? So if it's coming down, I'm buying into it. If anybody is new to CTrader and you're wondering how to get this stuff here, right click on your chart, go down to viewing options and turn on and off the deal map. The map is those blue lines that you see there. And I choose to keep the market sentiment turned off. I don't want to be tricked by it. I don't really care what the market sentiment is. 95% of the sentiment is retail traders. And so if it shows me something, I'll typically do the opposite anyways. So I turn it off. But yeah, that's the only 2 things that I don't care for. Oh, sorry, and the period grid separators, because I'm here for just a couple hours. Okay, yeah. keeping it simple. We trade commando style. If you're wondering how to get break even, this white dotted line that you have here, depending on which broker you're using, you have to go to indicators, you have to go to customs, and right up at the top there, there's one called break even. And I downloaded the Camarilla pivot off of the internet. Okay, so here's that pullback we wanted to buy. All right, so I have one trade in box number one, and now the market is pushing me into box number two. Oops, I didn't want to change the size. So this is now box number two, and I'll move this aside because we've already measured the leg up. I just want now to be measuring the leg down. Right, so in box number two, I'm allowed 4 clicks there as well. All right, so there's one of the 4. If we go a little bit deeper, I'll put number 3, or number 2, number 3, and number 4. All right, here's number 2. All right, if we go a little bit deeper, I'll put click number 3 and then click number 4. All right, we call this plan B. All right, plan A is to make 3 pips in box number 1, right, where I took my very first trade. And because my very first trade is in drawdown, I'm employing the mentality of an insurance company, right? I'm spending money so I can save money in the end. Right, so I'm spending money that's allocated to this, right? It's not money that I'm risking away. It's money that I've already judged for this purpose, right? I've already allocated for this job before I started my day, right? I know I'm willing, able, and capable of putting 1% of my money per box. I'm limiting myself to 4 boxes of clicks, right? So maximum, we're looking at 4% of the account, more or less, right? It's an averaging game, right? I'm limiting myself. That's the key here. If I don't limit myself, I end up over trading. And if I remove the boxes, I remove my security blanket, and I don't know what to do on 3 sides of the box. Worse is I don't know what to do and when to do it. All right, so if I put the box here, I know I need to buy here, right? These are just average moves stacked up. We stacked the boxes on the way up. Why are we not stacking them on the way down, right? We are. And so it's this ability to measure the environment as the environment unfolds, and then we follow along, right? If I remove this, all of a sudden, I'm not so sure what's unfolding next. In this case, I know that, oh, let's put that on the swing. And then if we readjust, we're barely breaking out, right? We're barely breaking into this lower box, right? This might just be a false break. It might go back up. That red line doesn't belong there. That's from before. Okay, so looking at our ladder, we're clearly going up the ladder. We've come up to resistance. There's a Fibonacci here from this bigger environment that we're within. And our target is just before we get there, right? Our target is in this zone here. Let's see what will give the euro the incentive to go there. All right, so far they haven't said anything on the squawk box. It's been pretty quiet. All right, let's close some winners. All right, here we are. There's one. And that gives us the opportunity to recycle this particular trade, right? This this risk is no longer a risk. It's money in the bank. And so I can take that chunk of my 1% and put it back to work on this red candle right there. Right? And as soon as I did that, break even, which is the average of my two trades, moved in my favor. Right? I engineer break even by spending money as I see fit. Right? It's an insurance policy mindset. Right? We're playing for a break up. 2 days in a row now, we've had the same kind of market behavior. And if we go and check out yesterday, right? Yesterday we repeated a similar type of behavior, right? Three boxes, ultimately a fourth, and then a rotation. Right? The day before, we were closing Friday's past, right? Friday's trades and rotating our position to longs. And the day before that, the day before that, we were trading in a hedge up at the top while protecting Friday's trades. And on Monday, that was Monday's trades. And on Monday, we traded both sides of the range. All right, so here we are recuperating Tuesday's losses. Business as usual.
House says if the economy evolves as expected, cuts can begin this year.
All right, couple of winners, boom, boom. What is gold doing right here, right now? Gold is at 21.57. It's at resistance, having a tough time going further. The next target on gold would be 2200, but I have a funny feeling we're gonna visit, 2120 or maybe 2050 before we go further. We'll see. Keeping an eye on gold in times of trouble. There we go, come on. It's a lot more effective when there's volatility. It's a lot less stressful too when I can see my trades closing. The last few days when the average day is 50 pips or less, it's disconcerting. We're good at range trading, but we don't appreciate it when the range keeps getting smaller and smaller and smaller.
US stocks extend gains, Nasdaq up 1%.
Here we go. Whoop whoop. Let's bust a move. Right, we're pushing up into that 50% area. Ba-ba-da-da. Right. So considering this was, just a breach of the box, really nothing major, I'm just going to reset and get ready for a move up. And then if we do get a break of this current box and move into this box, we would expect the price to remain in here until it breaks out of here, right? So on and so forth. It's this continuation or contraction. right? It's either expanding or it's contracting, right? If we look at it like this is contracting while this was clearly expanding. Right? The market's only doing one of those two things. It's either going sideways or up and down. Right? Pick your poison. Yay, come on, let's bust it. Let's break through that glass ceiling. Oh, it can't go any higher. It's gone so far. It can do whatever it
Taking a
wants to
look at the
do.
Fear and Greed Index, 75 out of 100 equaling extreme greed, and the Crypto Fear and Greed Index, 82 out of 100 also equaling extreme greed. And taking a look at the VIX, currently down at 1.24% at 14.33.
Awesome. All right, sit on your hands, wait. All right, only spend the money that's allocated to this box, right? In our case, I only have one open trade right now in the current box, and so I'm allowed three more. And if I zoom into this and readjust the boxes, right? I want to make sure I'm buying on the red candle because I'm cheap, right? I want to buy when it's cheap. Somewhere around support would be nice, like that, right? So that's click number 2 in box number 1.
So Sweden's government has made the formal decision to join NATO.
Oh, there we go. That shouldn't piss off Putin. All right, so I'm planning ahead where I'll be placing my other clicks. Right. I have 2. I'm allowed 2 more. I'll place a third one there. And if I can, if the market gives it to me, maybe I can get one down here. Right? We're trying to buy it cheap in a bullish trend.
At 10:30 a.m. Eastern Time, get the EIA natural gas change. Forecast draw 36 BCF on the prior draw of 96 BCF.
All right. Does it put me in box number 2? Let's see. If I go into box number 2, it allows me 4 more clicks, right? They're allocated for this. And again and again and again, right? I repeat this ideology, this process 4 times, right? So I'm allowed to keep buying for 4 boxes worth. Fantastic. We need to see what will happen at this 920 level, 915 area. Right? Yesterday we missed it. We missed that Fibonacci by 3 pips, 2 or 3 pips. Today we broke it by 2 or 3 pips. I'm curious to see if we're gonna end up on top of it and heading higher. Right? So if you notice the ladder we built with our mind's eye, we're testing this rung right here. Right? This is a decision point. We need to ask, do I need to bail from my trades here? Do I need to add to my trades here? There's a reason why the market is pausing in this zone. And that pause is an opportunity to act. I just took trade number 4 that belongs in the upper box. right? So now I'm free to take 4 clicks in the lower box. That now becomes, it's known as box number 2, right? And box number 2 is the cheapest place to lose, right? If I think this is not going up, but instead it's reversing, I need to close my longs in box number 2. Otherwise, you're going to be in box 3, 4, 5, 6, 7, 8, 9, 10, right? If you think this is just a pullback and you want to take part in the pullback in a bullish direction, you're only allowed to do so with 4 boxes worth of money, right? A typical pullback is 4 boxes or less. And so if it's more than 4 boxes, 5, maybe 6 boxes, probably not a pullback, but instead it's a reversal, right? You're jumping in a sinking ship, right? So the difference is in box number 4, right? Box number 4 is an average move, and anything beyond 4 boxes is beyond average, right? It's the right shoulder of our bell curve, okay? And so the top of the bell curve is in box 3. Box 4 is the right shoulder, right? And everything else before box 3 is the left shoulder. I can make that maybe a little easier to see. I just will want to take a few seconds. It's this, I can do that. I can do that off the screen and then bring it back in when I have it pulled up. The idea of the bell curve is what drives this entire thesis, right? The idea of the box is it gives you a frame of reference as to what the market is capable of doing by itself, right? With nothing else, just by itself, the market is willing, able, and capable of making these moves. And we appreciate these moves because we see them over and over and over and over. There's no arguing that this is happening. And this is what I'm talking about here. Right, so the top of the bell curve is 3 boxes. Right, that's 3 boxes. That's 2 boxes. That's 1 box. And that's the 4th box. And anything past the 4th box, I want nothing to do with it. This still has a chance of coming back in my favor. Right, so
at 10:30 a.m. Eastern Time, get the EIA natural gas change. Forecast draw 36 BCF on the prior draw of 96 BCF.
So the entire strategy is designed around the left shoulder of that bell curve, and we're trying to avoid going beyond a certain point on the right shoulder of the bell curve, right? And so it's containment. We have a start time, we have an end time, we have a roof, we have a ceiling, a ceiling and a floor, and we operate within that box, within that environment, right? Once you've defined the environment, understanding what's underway is the next step, and then step into it in that direction. It's like musical chairs. You don't go in the wrong direction when the whole circle is going in one specific pattern, right? So let's envision this going to the top instead of the bottom, in which case my box number 1 closes all of the trades and the market moves, and now I find myself in new box number 1 empty-handed. I get the opportunity to recycle these same 4 clicks over and over and over, right? So if I'm trading with the wind in my sails, if I have the right bias, if I did my top-down analysis properly, I don't go into drawdown all that much, right? And the drawdown is managed to 4 boxes or less. On the flip side of that, if I have the wind in my sails, like I'm hoping to do, I typically will just recycle trades like you saw us do yesterday. Eventually, I reach a target and then I close, whatever is remaining. Uh, it's a balancing act, right? It's a seesaw. I have to choose which side of the seesaw I'm willing to put my risk capital on. Right here's where I want to buy. Click number 3, and maybe it will grant me click number 4 a little bit further, right there. Boom, just like that, because I'm cheap, I'm thrifty. Right? If I reset my box onto this recent swing low here, it is the lowest low. Right? Let's call that maybe a flag. Right? And if this is a flag, where's the flagpole? Well, if this is the flagpole, then where's this flag going to take us? Oh, a couple more boxes. I can do that. All right, let's see. All right, it's just storytelling. You have to tell yourself a story, right? Just like a baseball announcer knows all of the players' names and he's calling out the game in real time. We have to do the same thing here, right? We have to call out the game in real time. And depending on how long you've been, staring at these screens, your catalog of experiences is more or less, adequate. Keep adding to it. There's nothing wrong with learning new stuff. Find these patterns, find these wedges and flags and pennants. Create these stories. Trade.
Powell says when rates are normalized, underlying housing shortage will still put upward pressure on prices. 1 minute remaining.
1 minute remaining for the oil news. It doesn't really apply to us. So, yeah, playing the long side today, buying support, right? We're doing it right now as we speak within one box. We have been within one box since we started trading, right? And so we're anticipating a bullish outcome on all of this, right? So this is an opportunity to buy. I already have my 4 clicks spent in my box. I'll put a 5th just for the argument.
10 seconds.
We were flagging here also.
Draw 40 BCF, draw 40 BCF, lower than the expected draw of 37 BCF.
Yeah, it doesn't have anything to do with us. We keep going. All right. Looking for pennants, wedges, flags, anything that stands out, anything that you recognize from before. Say, hey, I've seen this before. Double check because it's probably taking place, Over time, your menu will grow bigger and bigger, right? Your catalog of stuff you recognize will just catch up.
We have posted the US EIA weekly natural gas storage reports on the feed for all those interested.
Gold is coming off its highs slowly. And the euro is testing support. Love it. You know what, a plan works. We don't want to all of a sudden go against it. All right. Just a game of averages. All right. Focus on your own personal excellence, not on the perfect entry or the perfect exit. And it's not a game of perfection. Come on. Multiple days winning in a row feels good. Managing some losers on Tuesday, part of the game. It's a non-event. It's basically a scratch day. And here we are recuperating as if nothing ever happened. I don't want to click anymore. I've already spent my five clicks, 4 or 5. It depends on how you round up or round down. There we go. Let's recycle some of these. Like so. Right, so we've had a handful of winners already in 35 minutes. We seem to have survived the Lagarde speech. The Powell testimony is probably still on the way. There's a fly on the wall that'll let us know for sure if something's afoot. All right, let's watch it break. I want to see if it breaks up, and then a break into the upper box here is a signal. It's a trigger. It's a clue that we're trying to give us, the market's trying to give us another box, a full box, right? So it's, if we break, it's trying to go here. All right, just like it did here, and it did here, and it did here, and it did here. Okay? If we break, we're going one more range. It's a range on top of a range on top of a range. Right? Don't make it harder than it is. It's only going sideways or up and down. And you can see that clearly here on the 5-minute chart, right? It's either going sideways or up and down. Yeah. All right, come on. Let's recycle these trades. Beauties. Just like that. And now we're in a new box number 1, right? With no or almost no trades. I'll buy this. 1, 2. Right? I'm buying this candle that was red a second ago. All right. If it drops back down, I have 2 clicks left for that particular box number 1. Right? By picking one side versus the other side, typically you pick, the right side, ideally. You are, by definition, avoiding at least half of the mistakes you would have potentially made, right? So this is why we do top-down analysis. We just don't start trading what's there. We have to figure out what we're trying to do overall, and then, build with the facts. All right, so here we are. If it pulls back a little bit more, I'll recycle. I'll reopen my trades. Right? It's money that's allocated to this. Well, never mind that. Right? So, should we call that a trading session? Should we call that a day? Make it a 40-minute trading session? Right? This is what we did as a group. Ultimately, the target is around 940, 950, right? So maybe 2 or 3 more boxes. And then you want to become a seller, just like we did yesterday. Okay, so I'm gonna take the picture that you see here, and we're gonna call that the video. This is it. This is done. Our trading session is over. Right? Enjoy your day, ladies and gents, and I'll see you tomorrow, same time. Bye-bye.